foundation, and the foundation is the market structure. In the beginning of this video, let me first clarify you. Don't skip a single portion. Don't skip a single concept which I'm teaching here, because there will be two possibilities, because I'm a person who talks in terms of probability, because being a trader, things looks in terms of probability to me in day-to-day life. There will be two possible listener to this video. The first will be who will be thinking I know the market structure. Second audience will be they do not know the market structure. The first audience, right, who thinks they know the market structure, out of that audience, right, maybe 80% will be proven wrong when you go through, the market structure I would be defining. You will see how wrong you were drawing the market structure earlier, right? Your concept will be, totally change. Maybe 20% would be right also, right? For them who know also, they should also go through this market structure. Never skip a single portion if you really want to take 100% of it, right? Because the same live webinars which I give in price action monk, live webinars, it's very highly paid webinars, right, which you are getting here for almost, no fee. Like, it's very lowest fee possible, right? We are offering here. So don't miss it. Don't think it's a course, we are buying in just a small price would not have value. I'm really going to give value here, right? I really want you to, take something out of it, and you will get profitable after it. Since I'm using complete price action, so you should, the base, right, and the ground of the price action is structure, and you have to be clear in the structure, right? So this is about the first audience. Second audience who don't know, they have to take notes. They have to, they are very good those who don't know. Why? Because there are thousands of market structure concepts explained by the people in the market, and believe me, out of 70 to 80% concepts are wrong. They even don't know what is the right market structure. They are drawing wrong market structure. Even they are a popular YouTubers, right, with more than 20-30,000 subscribers, right? So if you don't know, you are going to know from me. Believe me, you will save your time. You will be not going in a wrong direction. There will be nothing you have to vanish from your mind, right? It will be a fresh, and it will be a total right concept I'm going to set for your brain, right? So these are the two possible audience, and both audience need to go through this market structure concept. So what is market structure? Every single word of mine is having a value. So keep a note of every single word which you think is a valuable for you. Those who are new should take a note, and those who already know, they should correct themselves where they are feeling okay, this I was not knowing, this I was having a wrong idea earlier. That's why even I was drawing a correct market structure, but if the market was not behaving right, I always have a doubt I'm drawing right. So those people should also take a note and correct themselves, right? And those who are new, take a note, guys. Believe me, I will change your total trading journey. You have to do one thing in this trading world. We will cover it in psychology. You have to believe. If there is no belief, you will never make money in this uncertain market, right? Only one thing can take out from this uncertainty is belief and discipline. We will talk about that later. So let's talk about market structure. So my first question arises here: what is market structure? What it signifies to me? Why I should draw market structure? Shall I use any indicator for market structure? Why should I do that hard work? So let me answer all of these questions, because been asked to me by several people all the times in this trading career, right? First question: market structure will tell you whether the market is going up, whether the market is going down, or whether it's not going anywhere. If it's going up, I will try to trade on the buy side or upside or bull side. If the market is going down, I will plan short trades. I will try to sell, right? I will try to plan my position to the downside. My view will be bearish. If the market is sideways, extremely as an option buyer, I will get away from the market, completely away from the market. No, I will never ever enter in the market. Okay. As an option buyer, I will tell you sideways market occurs, most of the time, especially when the market already performed a bullish momentum for a long time and bearish momentum. And this is a critical part. And I had seen many Many of the people who did very well in the bullish market, made some money in the bullish market or bearish market, they wipe out every single thing they had earned here and also pay from their pocket in the sideways market. Why? Because the market is sideways. It takes them to understand the market is sideways, and it's already too late when they understand it. Already they manage their account. So if you draw the market structure properly, you will really able to eliminate from this. And I had saved myself thousands of time from this market. Second question, which in the this question I also told you, is there any indicator? There are thousands of indicators in the trading view, but I have never find anyone which is correct. I don't believe on indicator which is freely available, because first of all, free thing never works most of the time. I'm not saying 100%. As I told, I am a person who talks in the probability, but 99% probability free things you will not find that actually work, right? And those people who know the things, their things, some indicator definitely works. Even I had coded the indicator, right, and which is being sent, that definitely work, no doubt in that, right? But all indicators do not work. Few are good and few are used by professionals also, but they will never agree they use. But some indicators they use. But yeah, not only indicators, they use price action, their weightage in the, the whole trading what you say setup. Price action weightage is more than the indicator weightage. What beginners do the mistake, their weightage of the indicators are more. They put a lot of indicators in the chart. They do not even understand where the market is going. If I ask a question, right, to a person, tell me whether the market is bullish or bearish, he will tell bullish. Sometime he will tell bearish. Sometimes I don't know. But actually, when he realizes the market is, maybe it's not bullish, or maybe it's not bearish, right? So you should be very much clear when the chart is naked. I I truly love to watch naked chart rather than make this messy with thousands of indicators, right? Because it really give me a clear indication of buyer and seller views. Chart tells everything. Not only heard it several times, but even I heard it when I was not a trader. But after trading a long time, after using thousand indicators like you, I came to a point and realized hardly 1% of them actually gives are good and give some idea. 99% are waste. And at the end, the last thing in the planet of earth, right, where you have to learn trading, you have to switch to market structure, price actions, candlesticks. That's it. That's the only way you can. All the professional trader use market structure, candlestick, price action. Simple. They don't use anything. Little bit of indicator, like just for touch up. They use sometime. That's it. Not more than that. So let's come to the market structure. There are three types of market structure: bullish market, sideways market, and bearish market. If somehow my structure says it's a bullish market, I never ever plan of selling. If my market says this is a bearish market, I never ever think of buying. Don't be confused with the buying and selling terms. I'm not talking in terms of option buyer and option sellers. I'm talking with respect to a general buyer and seller concept. Means buyer means I look for a upside momentum, okay, and seller means I look for a downside momentum in bearish market. I do not plan for any upside momentum in downside market or bearish market. And sideways, this is the thing which I keep myself away. I look for some other trading instrument in commodity market, and like in currency market at that time, or crypto market, but I leave the market when it's a sideways until the trend is not clear. Next question comes to me, sir, which time frame you use? Very much frequently asked question, and people are confused with this and they think it really impact their decision. Yes, it do impact, because you not be confident until your trainer will not tell you is the time frame. As a beginner you should use it, right? So I always clarify the things to the candidate, and I will tell you 15 minutes as a time frame I use to decide my market structure, where the market is moving. As an intraday trader, I will have an idea, okay, the market is bullish as of now. So when I come every single day, I will plan for a buy trade, right? As if you talk about option buyer, I plan for a call side, CE side. If I I'm 100% sure, right? By drawing, it's a bearish market structure. When I come every single day, I look for selling side opportunity, downside opportunity, and if I talk about as an option where I look for PE side, put side. And if it is a sideways market and 15 minutes saying I stay away, I generally stay away from the market. So, what is a bullish market structure? Let's understand. So, bullish market is a market when the market tries to break the high. When it's going up, take some pullback, and in the next move, it breaks the high, goes up, then takes some pullback. But in this pullback, while it's taking this pullback, it will always protect the previous swing low. And again, it breaks the next swing high and goes up. What it means, you already know this, right? In bullish market, the market try to, some people, right, or maybe more than 50% probabilities, people would be knowing this. In the bullish market, market breaks the high, and right, it breaks the high, right, and it protects the previous swing low. Means it's always going to protect the swing low. Majority of the people already know. But had you thought in the way which I'm going to make you think, which as a professional trader I use this concept for entry and target booking, since I know it's going to break this previous swing high, don't you think I already know where is my target if I enter somewhere here? Because I already know this is a liquidity. Liquidity is a term, means you can, I do not want to go much in depth in those things as of now, but liquidity is a term which is used for hunting stop losses, okay, or where majority of the money or retail trader stop losses are there. So you know, I already know the market is going to break this high, break this liquidity, I'm going to, break this structure, right? In the uptrend, it's going to break this swing high. So I already know where my target is, right? If somehow I plan my entry at this point, I know where to exit. It's a quote, right? It's already been, before getting in, I already know where I should get out. This is an actual quote of a professional trader. So with the structure break, I already know where I have to exit. Okay, it's going to go up sometime. Maybe I can trail, but minimum, I should exit here. In rush, as a bank nifty trader, you might exit here, because you are afraid. You don't know the station where you have to, stop. You do not know your bus stop. When you are on the bus, you jump from the bus before the next station. I wait for my next station or stop loss, because if it is an uptrend, it's never ever going to go below this, and it will definitely going to break this, what the probability says and definition says, right? So I know where my exit is. The first point from the market structure I need, I actually understand. Second thing what I understand from the market structure is, if somehow I know this is a pullback, right, because it's an uptrend, so it's not going to break the previous swing low. Let's say if it is an uptrend, it's not going to breach this previous swing low. If somehow I figure out if the pullback is over at this point, okay, let me just make it with different color. If somehow I would be knowing it's an uptrend, definitely is going to take a pullback, I will not, do some FOMO, right? I will be not having, let me make it a red color. I would be not having FOMO, fear of missing out. I would be not having FOMO. Why? Because I already know if it's breaking and it really has to go up, it will give me a best price after some time. I have to wait. So I know it's going to take a pullback. It's never going to go below this. And the pullback is nearly, it's almost near to this. So when the market is at this level, right? Means at this level, I'm not showing any FOMO, because I know the pullback will be nearest point to this. So when it started coming down, what would be the nearest point? I would be coming to that when the setups. But I know when it's a pullback, the pullback should be nearest to this swing and not going below this, right? So first of all, when I know the market structure, I'm not going to show any FOMO. I'm not running when it's breaking and then I'm jumping in because I'm waiting for a pullback. Okay, some cheaper price, some best price. I don't want to buy something which is costly. I want to buy something which is at the best price. Now, if somehow with my price action techniques I know this is going to go down after this up rally, because it has to go up, it could not go up in one way, it will take some pullback, then it going up. So somehow with the price action, if I figure out where the pullback is almost over, don't you think it will give me some sort of entry, right, at the best cheaper price? And I know at the worst possible scenario this low is going to go, it's going to, the market is going to break this low. When the low is broken, uptrend is over. So if it is really has to go up, it has to protect, it has to. So don't you think I got a perfect stop loss? Because it's not never ever going to get hit, because smart money and those people who are actually taking the market up, they will never break this low because their stop losses are there, right? So don't you think I'm getting a perfect entry, perfect stop loss, and a perfect target where I have to exit, right? Is it my stop loss? Is it my entry? Is it my target? Not always, but yes, the base of booking the targets, book, putting a stop loss and entry will be relying around this concept only. Okay. So this will be my, don't you think if you put your stop loss below this, like here at this point, if it's, and you take an entry somewhere here at this point, market, what market did, it didn't went up, rather it slowly came down till this level. Let's say till this level it came, but it respected the low because it is an uptrend, and boom, went up and broken this, right? Because it always have to break it, because if it is an uptrend, this is the beauty of price action. This is the beauty of market structure. That's why I always teach market structure. If you know the market structure, it's a bullish market. In this pullback, you will do nothing. You will always wait for market to complete its pullback. Okay, then you will plan your trade at this point, and always you will be knowing here I have to exit. This will be my exit point all the time. If the market is in downtrend, opposite will go. So let's first talk about bullish market. So I hope the bullish market structure is clear at this point. Any doubt? If you have, feel free to ask questions to me, here on the platform you can ask me questions, right? But make it clear, the markets, if it is an uptrend, it will always break the high, previous high, and always protect the previous low. If I entered somewhere here in this rally after the pullback is over, right, most of the time you will see the pullback is over by making a head and shoulder at this corner, making W pattern at this corner, and then I know where to exit. Boom, here is my exit, because it will going to break this high if it is in uptrend. If it is not in uptrend, uptrend is over, it's not going to break this. Okay, you might ask a question, sir, I take an entry here, but luckily or unluckily, when I took an entry and I thought, since it's an uptrend, right, I took an entry somewhere here, I put on stop loss. Let's say at this point is my stop loss, this point is my stop loss, here is my entry, and this was my exit. But unfortunately, I got, I was not lucky overall. And what market did, market came down. Okay, it didn't break the high, then it's doing like this. What should I do? You have to wait for a stop loss, because if it is has to go up, these are called internal structure. I will talk about that later, because sometime it will make an internal bearish structure, and what it will do, it will again break it. Or if you are really, this is the probability, right, because the market is about to change the trend, then might be it will hit your stop loss. You should be happy if the stop loss is hit. Why? Because now at least one thing is clear, the market is in downtrend. So next time, right, because when your stop loss will go, it will only go when the market is going to change the trend. And when the market is going to change the trend, you should be always happy. Why? Because the trend is change. From there you are entering in the beginning of a new trend, so you will ride a big trend probably. right? So don't be upset in if you are like following the market structure, price action, and your stop loss goes, no issues. First of all, it has to be in uptrend, it will never hit your stop loss even. Okay, and if it is in downtrend, it change the trend, it's your stop loss will go. So okay to give one stop loss and get it corrected. You be wrong for one time and get right for several time after this by changing the direction of the trend in your trades. So this is about bullish market. Let's talk about bearish market and sideways market in next video. So that's all for this video and session about the market structure and bullish market. We will understand the market structure in the next videos also. Thank you.